Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, February 3rd, 2023. So, we just finished a quick video for the good folks in the Gold Room, and the message for that video was a continuation of the message you already got here for free on the YouTubes. And it was, I think, maybe 2 weeks ago, we made a video called Rotation Time, and we are certainly seeing that play through. So, what did rotation time mean? Rotation time meant that maybe it was time to start rotating out of the previous winners, like energy and materials, and back into tech, mega cap tech, and kind of the bottom of the barrel stuff like Piton and Roku and Zoom, and all of the rest of those names. So we're going to kind of review a couple of those things, see how that's progressed. It certainly has progressed in the last 2 weeks since we made that video. And then I'm going to start here by showing you the target that I had given you guys probably a couple of months ago now on the SPX. It just happened to take the scenic route there. And it was this 4180 target. Now, the main thing I want to stress to you guys is, as hard as it may seem to believe, if the rally ends, it ends here. I know it's just getting started. It looks as good as it's looked. I get that. You have all kinds of positive signals here. A positive trend oscillator cross right there, which you have not seen in forever. Your weekly squeeze looks proper. But here's the thing. This was a symmetry target, right? So meaning that if you take out the last couple of swings, this was where it was targeting, and you can see how cleanly it went there, and basically that was the high today. And in doing so, if you look at the structure here, you still technically have a series of lower highs. Now you have made an intermediate higher low, so it is trying to reverse to the upside. And I'll stress again, this is as good as the market has looked in general, pretty much over the past, let's say, 12 to 18 months. But just be careful here, because we got here so fast in such a manic way, especially yesterday with Google up 7 and so many tech stocks up 10, 20%, that we are very far away from support. So be very careful going into next week. Keep in mind that Powell will grace your television yet again on Tuesday, and who knows what he's going to say. So instead of guessing what the old man's going to say, understand 4180 was your major target slash now major resistance. You are very far away from natural support, and a couple of things like the dollar are actually bouncing off of support. So this is one thing that you don't actually want to see if you're bullish, because, well, you don't want to see a continuation of it. The fact that it's bouncing off of this support level, not a huge deal, because it was pretty oversold getting into this support level. But if it continues any higher, right, like it's allowed to mean revert, but then it has to come back and do this. If it goes any higher off the support level, it's going to keep pressure on multiple parts of the market. So essentially what you have here in front of you going into next week, and with Powell as a catalyst again, is the SPX at a target, which is 4180. It's very extended on an intraday basis, very extended away from a daily support level. And then you have the dollar, which has been a major tailwind for markets to go higher, at support and basically oversold since about December. So whenever you go into a support level and you're oversold, you look for a bounce, right? So the things that helped the market are now trying to bounce, and the market has made its near-term targets. So be careful out there. Control your risk with size and by buying the pullback. And I think that the rotational parts of the market are still going to stay live, meaning that folks, and this is really important, and kind of the message of the video, frankly, ask yourself this: how are other traders positioned? Right? Regardless of what the charts look like, ask yourself, well, how are other traders positioned? And in my estimation, after yesterday with the tech crash up, and you had things like Exxon basically crashing down, traders are clearly positioned short tech and long the previous winners like energy and materials and industrials. And yesterday, with tech crashing higher, if you're short that, you then have to you're forced to cover, right? So you have to buy those shares back. The problem is that they're short tech and long energy as a kind of a cross, pairs trade. and both of those effectively crashed for them yesterday. So be aware that that rotational element is still there. And at least for now, in my own head, I'm kind of putting the inflation sectors to the side. So that means energy, materials, banks, industrials, kind of putting those off to the side and really focusing on mega cap tech and kind of the beaten down names like Zoom, Square, Shopify, Zillow, things like that. And I think at least for now, that's the modality we work with. And frankly, it's not so bad. I mean, I prefer to trade those stocks anyways. So I think that can persist until the market decides to change its mind again, which probably won't be until the next Fed meeting. So that's what I got for you guys today. Hope all of this was helpful. Leave us a like before you go somewhere else on the YouTube. If you're not subscribed, go ahead and click that button. And I hope to see you guys here again on Friday. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.